Hi, Nirothambi Pillay here from Investment Rise. And today I want to talk about probably the most common question I've been receiving over the last several months. And that is, where to buy next? You see, everyone understands that Sydney and Melbourne have had some phenomenal growth over the last few years. But we're at a stage right now where those markets are going flat, growth is declining, and in some cases going backwards. In fact, just in the middle of this year, CoreLogic came out and said that 1 in 5 unit holders in Melbourne were losing money. Now, CoreLogic, formerly RP Data, is one of those companies I pay a lot of attention to because they've got the street cred, they've got the reputation. So if Sydney and Melbourne are at their peak, well, where's next? And one of the things I look at whenever I'm starting to analyze property trends and patterns is, well, let's first look at history and see what happens, and then look at how likely history is to repeat itself. So if we look at this sort of dodgy map of Australia, sorry, I'm a terrible artist, but if we look at Sydney and Melbourne here, what we see, and it's happening right now, and it's happened every time after a boom, is there's a ripple effect. The money starts to go outside of Sydney and outside of Melbourne. Okay, and it starts to go out and then goes to different parts of the country. But there's 2 reasons why money goes out. And you need to know what those reasons are, and one will cause you pain, one could make you some significant gains. The first reason why money goes out of these capital cities, these large cities, especially when there's been a boom, is that people have gone, well, prices have risen to a large level, great, we can't afford it, or there isn't that much growth there, let's find a cheaper property. Let's get a property with a better rental yield. And so what happens then is the money goes to those areas that are slightly cheaper. But the problem is then that those areas start to rise in value, and everyone says, oh, look at the next great area. It's starting to grow in value. It's got better rental yields. This is where you need to invest. But the problem there is those gains, they're artificial because they're driven by investors. And I never want to be buying an area, having my clients buy an area that's driven by investors, because what happens? That area goes up and then comes back down again. Here's an example right now. Tasmania was one of the hot spots recommended by people earlier on this year. And a lot of people said, oh, look, property is cheap in Tasmania. That's where you need to buy. And I said, no. I don't like it. I don't think so. And on the 1st of November 2016, CoreLogic came out and said properties in Tasmania dropped 2.5% last month. In fact, it was one of the biggest drops in the country. Why? Because if you follow an area that's investor driven, so people from, say, Sydney and Melbourne just taking their money and going to an area that's cheaper, the problem is that that's artificial. There's no long-term reason for those areas to keep growing in value. So therefore, I don't want to follow an area that's investor driven. What do I want you to do? I want you to follow the people. And what do I mean by that? I want to know, where are the people moving to? Because the other reason money moves out of capital cities like Sydney and Melbourne once prices have risen to a certain level is people go, well, we can't afford to even live here. Let's go find somewhere better to live, maybe somewhere a little bit cheaper to live, but somewhere where there's also massive growth in jobs. And where's that area right now? It's happening up in southeast Queensland. So in and around Brisbane. So for me, I want to be investing in areas where there's massive growth in population, where there's massive growth in infrastructure, where there's massive growth in jobs. Why? Because if owner occupiers, if people are actually wanting to buy these properties, well, then you've got a long-term gain. In fact, according to Deloitte Access Economics Queensland's Business Outlook report, the Queensland economy is expected to have the strongest economic growth from now leading up to 2019 and beyond. See, that's the kind of market I want to be investing in, where there's massive jobs growth, a really strong economic push. So yeah, right now, the hottest market to be investing in, the market where people like John McGrath, founder of McGrath Real Estate, says is the only place to be investing in for the next few years, is Southeast Queensland. But let me caution you, Queensland is bigger than most countries on the planet. And there are some really good areas and some really shocking areas right now. There are some areas that people are saying are great hotspots, but their vacancy rate is upwards of 5%. Now, what does that mean? Well, remember, a vacancy rate of anything more than 3% means it's going to be harder to get these properties rented. So you don't want to be investing in areas that have got vacancy rate of 5%. Other areas are flood prone. You don't want to be investing there either. So you need to be working with someone who has the experience to be able to guide you to invest in areas that have got massive demand for tenants. In fact, greater demand for tenants and potential properties, so a really low vacancy rate. That's what you want. Secondly, you want to be buying in areas that have got great jobs growth, great infrastructure, people moving into the area, so you're going to see really good capital growth, right? And you want to be able to buy properties that cost you no more than a cup of coffee a day. These are some of the key criteria we at Investment Rise really use to help our clients. And if you think that's going to help you, if you think that you want to work with someone or at least find out how investing in property in key growth areas can help you achieve your long-term financial goals, then hit us up, send us inquiry on the link below. I really hope this video's been helpful. I hope it's shown you that there are some great opportunities right now to invest in property. You just need to follow where the money is going, but then you need to know why the money is going there. If it's going there because people are actually moving into the area, if you follow the people, you're gonna do fine. Let me know your thoughts and comments below. And again, if you wanna find out more about how we can help you, there'll be a link below this video. Click the link. I look forward to speaking to you soon. Bye for now.